The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the March 24th terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who knows that each of us should always be pioneers of our future versus prisoners of our past. Hope each and everyone out there had a magical Monday. Let's make sure that you and I, that we do everything we can to have an extraordinary day. Of course, the easiest way to do that is to always remember that life happens for us, not to us. When you and I, when we can make that one little 2x4 exchange out there, that means that you and I can find the good in every set of circumstance that life throws at us. And that is really important. It's really important when you're trading these markets because you've got to be able to see both sides of the trade. You've got to be able to see the bullish side and the bearish side out there. If you only see one side of the trade, well, basically you're blinded, or you will get blindsided out there. Now, the most important thing is for you to know that I'm grateful for your presence here today. I'm here to serve you. That means go ahead and pick up that phone. Dial on in at 877-927-6648. Internationally, that number is 727-445-1044. Remember, this is Terrific Tuesday. Of course, none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures up about 13 points, trading out at 18,029. S&P futures up half a point, trading at 2,095 and a quarter. NASDAQ futures up one full point, not percentage point. 1 full point, trading at 44.37. Russell is flat. King dollar back 383 ticks right now, trade at 96.90. Gold's up $5. Silver's up 9 pennies. Light sweet crude up 67 cents. Natural gas up 6 pennies as we speak right now. Again, our call number 877-927-6648. You know, I made a mistake. I've been giving you, I think, the wrong consolidation level inside of the FTSE out here. As you know, we pay attention to what's going on in the world markets because these markets work, in step with each other out here. And if we take a look, I think maybe it was on this page here that I did. Yeah. If we take a look at the FTSE, I had actually been looking at the high from 2007. I believe it was the high in 2007 inside the, which is a weekly chart, by the way, that you're looking at if you were watching us on TigerTV. The actual high in 2007 was at that 67.54 level, which price broke out of. But voila. If we go back just a tad further, like to 1999, the actual high inside of the FTSE, which was the all-time high, now we're at the all-time high, was actually at the 69.50-60 level. Now, this is a weekly chart out here. Now, that consolidation, by the way, huge, absolutely huge, 3,448 points. Not as large as the New York Stock Exchange consolidation, which has been broken out of, which is 6,000 points out there. Yes, 6,000 points. In the case of the FTSE, let's bring this thing back on par here. In the case of the FTSE, so long as price stays above 69.50, 60, and last week, let me now go ahead and we'll zoom in on this. Last week, a nice wide-ranging bar. That's the way you like to see something break above a level of resistance. Or on the short side, it's the way you like to see something break a level of support. In this case here, it broke that resistance, a nice wide-ranging bar. I don't have any kind of volume behind that move out there. The wide-ranging bar tells us plenty. Now, what's likely to happen? As I've mentioned, we're in this little period here for the next 7 calendar days, probably the next 6 trading sessions out there or so. Let's not time me to the exact day, although I'm pretty good to the exact day out here, where we're going to see this little choppy marketplace out there. Now, choppy is not the same. Does not have the same definition. In fact, if you look in Funk and Wagnall's dictionary, choppy does not mean short. Choppy means choppy. Choppy means the market's going to kind of, move sideways out here, up and down, but it does not mean short the market. What you'd like to see, if you were long the FTSE now, you'd actually like to see during this period here, you'd like to see during this choppy period, you'd like to see price come back this week You'd like to see it could do it next week too, but you'd like to see price come back and test 69.50, 60, and then reject that area, and then that sets up longer term, huge move. Now, when I say longer term, look, it took 15 years for this consolidation to unfold. That doesn't mean that by this coming May, you're going to see a 3,400-point move inside of the FTSE. But so long as price stays above this consolidation level out here, it offers a price projection over the long haul, 10,398 out there. And we know that markets around the world basically have been breaking out. In fact, we didn't look at the Asia markets yesterday. Let's go do that because I recall if it's the Shanghai or the Hang Seng. And yeah, well, if we take a look at let's take a look at this. How about this? Well, this is interesting. Be away for a week or so. So the 2008 resistance level, we're taking a look at the Shanghai right now. So this is kind of interesting. The resistance level, remember, we just went back to 1999 inside the FTSE. Inside of the Shanghai, the 2008 resistance level was 36.55 out there. And price broke above that, broke above it on March 17th, continued higher on the next trading session, has continued higher ever since. Yesterday's candle a little doji out there. Now let me put this on a monthly chart. Let's come back and take a look at this. Now that level was a 2008 high. We can also see as we pull this back that what price has also done, it's broken above the 0.382 retracement. That's the retracement coming off its high from 2007 down to the low that was placed in 2008. When you break above one floor out here, that's what the 0.382 retracement, that's really what Leonardo da Fibonacci created for us. He created these price levels that we use as guidelines, and we really use those as floors. As one level gets broken, moved above in this case here, what it does, it offers a price projection of the next level. In this case here, this says the Shanghai should be moving up to the 4642 level. So we've just taken a look at the FTSE, understanding how these worldwide markets work out here, not getting too caught up into, I love this one with regard to rates going up, okay? And that the rates going up, eventually going up in the U.S. is somehow going to crash this market. Are you kidding me? Who comes up with that kind of stuff? Let me ask you this question. Let's just assume you happen, I'll get back on this too, but let's just assume you happen to be an investor, all right, and you've got, you've got an allocation between bonds and you've got equities and commodities, whatever your allocation might be out there. Are you telling me that if you see percentages in the 10-year or the 30-year start to move up, you're going to go ahead and you're going to actually say, it's time for me to get out of equities because the interest rate that I'm making on these longer-term treasuries is exactly what you were looking for? Are you kidding me? Really? Who out there is actually believing that? Maybe there's going to be an initial bump or something along the way, but are you really going to change your allocation because you believe that this new interest rate that might be available to you is worth going ahead and moving out of equities into longer-term treasuries? I just don't understand just simply the mere logic, just the simple logic out here. Sometimes that's really all that we need to use, just simple logic. I've spoken to many people, and there's not a single one that says to me, Steve, as soon as these rates start going up, I'm reallocating my portfolio from out of equities into these longer-term notes out here. No one is saying that. You're not saying that out there. So don't believe the crap that is spread on the financial news out there, because it just ain't so. Instead, what we're seeing out here is we're seeing markets that are breaking out of consolidation patterns. Just take a look at what went on in the DAX out here. We take a look at what's going on inside our New York Stock Exchange. Now we're taking a look at the Shanghai out here. Here's a monthly chart. We see the price has moved above the 0.382 retracement out here. Let's just really try to keep things simple. What this says to us, so long as price continues to trade above what looks like 35, 37 out there inside the Shanghai, price is going to want to run into about the 46, 42 level out there. So that's what's going on inside of that market. It is always good to get an idea. In fact, let's take a look at the DAX. Let's look at this on a monthly basis out here. If we take a look at the DAX on a monthly basis, and that takes us back into our 2009 lows out here. In order to get a real perspective with regard to getting your mindset and what you should be doing, what we should be thinking out here, if we take a look at the A to B equals CD pattern inside of the DAX out here, coming off the 2009 lows, makes a nice move up into the highs out here where it ran into resistance, natural resistance really, really, right around the highs of 2007. Didn't get all the way up there when it made its B point of the A to B equals CD back in May of 2011. It makes about a 0.618 retracement, just slightly more than that, 65% retracement out here. And then it's been on basically a straight move to the upside out here. And this says that the DAX's next price projection on a monthly chart says 12,988. There's not anything that we're looking at inside of the DAX. There's no price relative strength divergent pattern or anything inside of the DAX chart that suggests that it wants to do anything but move to 12,989 out there. So you've got the DAX communicating to you and I that it wants to move higher. We know that the FTSE does at this stage, breaking out above a long-term consolidation. We looked at the Shanghai out there. That says it wants higher price. If we go take a look at the Hang Seng, let's go see what the Hang Seng has in store for us. Let's go take a look at its chart. Let me see here. Let me get rid of this out here. Probably screws up a daily chart, but that's okay. Let me put this out here. Its price projections, A to B equals CD, says that 26,755. That was a shorter one. Let's take a look at the longer A to B equals CD inside of the Hang Seng out here. 8 points all the way down here at 2008 in September. Your B point out here is in November 2010. Your C point down here in October 2011. How about that for a price projection inside of the Hang Seng? That gives us a price projection 1-to-1 A to B equals CD in the 30,482 area. And at this stage of the game, if we just take a look at the natural area of resistance, its B point, which it has not taken out just yet, that's 24,988. That's going to be the level to be watching. Take a look at that B point. Every time price has gotten up here, again, this is a monthly chart that we're taking a look at, price first made its way up there back in August 2014. Got a nice little reversal signal out here, a little evening star pattern, bearish engulfing, the whole 9 yards, and that was down on September of 2014. So this B point, as well as that high from September, which is, by the way, 25,362, that's the number to be watching. As soon as we see price move above that level, that's going to give us that price projection of 30,482. It's not there yet. Will it get there? Yeah, I think that it will get there based on what it is that we're seeing with regard to the markets around the world. So what does that mean that you should be doing out here? You should be buying the next dip. If we see a dip over the course of the next 5 trading sessions or so, you should be looking to buy that next dip out here. That is the message of the markets as we take a look at them. If we go take a look at what's going on inside the currency world out here, we take a look at the daily charts now in the currency world. You've got the euro, Japanese yen. Right now, this has just been moving sideways. Come on, pop up on my screen out here. I don't know why we've got that delay. This is the daily chart for this currency pair. Nothing bearish, really, as we take a look at this currency pair, as you know, muy importante, because this is the carry trade. This is the currency pair that tracks the U.S. stock market better than anything else. And at this stage of the game, sorry, but this does not show any kind of negativity whatsoever. Hey, this is Steve Rhodes. This is TFNN. Of course, that's my view out there on the markets. We'll be right back, folks. Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. A couple of questions during the breakout here. One with regard to natural gas. So if we take a look at natural gas, right now it's up about 6 pennies out here. And the question that came in says, when do you see natural gas making a low? In April. Now, that question is based on the seasonal chart. Let me go ahead and put this in an 11-year seasonal chart. So, and then we'll come back and take a look. So natural gas here yesterday, you can see bouncing off of its TAS market profile low, $2.71 out here, making a low. And if we take a look at the seasonal chart, give me a moment here, slideshow from current slide. There we go. Okay. Now we're taking a look at an 11-year average out here. And what I want you to notice is natural gas on average here makes a low right here at this point where my cursor's at. That happens to equate to the date of March 21st. Now, the market wasn't open on March 21st, and I haven't reset the 11-year cycle pattern to the trading days inside of 2015. So you got to give me just a slight break here. So we saw a low that was formed yesterday inside of natural gas. This shows here the natural gas ought to just kind of gradually move up and down, maybe make a high out here. Let me see. I can do it on a different, I got to come over to the actual chart. The actual high, this is April 2nd date, right around here. So between now and April 2nd, we're likely to see natural gas not make any kind of low or anything, but continue to just kind of, and if we take a look at the, and by the way, to answer the question, this is the point here at which which the viewer was asking. When is that low in April? That low in April, and you have to go take a look at your trading calendar out here, is somewhere right around April 9th. Again, I did not adjust my dates in this chart that we're looking at for the 2015 trading cycle. So it's going to be somewhere around April the 9th. Maybe it's the 8th, the 9th, the 10th. It's somewhere right around there. And you want to use this as a guideline. You want to be able to use this as a guideline to take a look at other patterns that would be setting up in the market. Now, what do we know about natural gas? I say if you trade natural gas, you got to keep your finger on the trigger here, because what you're looking at is we can see this little consolidation. We can see these market profile numbers now. Well, they've actually worked for us, and that resistance out here with natural gas, and I would expect that what we would see come that April 2nd-ish time frame, you would see that $2.93 level act as a resistance. Can it spike higher than that? Yeah. Can it even close higher than that? It most certainly can. But look for natural gas. You know, there's the trading range has been so narrow here. What I would think that somebody would look for is something else to trade. It's just too narrow of a band, in my opinion. Now, come that date, which was, what did I give you, April the 9th, April 10th, somewhere right around there. Then, from a seasonality standpoint, and I can't tell you why this works, I just know that it does work out here. Then maybe there's a trade. Oops, that's the wrong chart. I didn't want to show you that one. I wanted to show you this one. From that currency. There we go. Then we start to see where you could see some type of move inside of natural gas up until the looks like the June, July timeframe. The actual date out here, I'll give you that. Typically, from a seasonal standpoint, you get a high right around the June 18th timeframe. So hopefully that answers the question with regard to natural gas. Another question was, could I take a look at the daily chart here for the S&P futures contract? Now, I'm going to go ahead and put up this daily chart for the current contract for the ES Mini, and the levels to be watching. So I say, you know, you'd like to buy the dip. If you were fortunate enough to see the ES Mini, the S&P futures, move down to about 2,081.25, not to be exact or anything, but that's that blue line going across my screen. If, in fact, you would see futures move down there, especially if we were coming into the next week time frame, Monday, Tuesday, Wednesday-ish out here, that would be a nice trigger point for an entry. If we see that area get breached out here, then we could see price move down into 2060 level. I just know that the market is going to be choppy. It's, to me, choppy does not mean short whatsoever. As we take a look at this daily chart here for the ES Mini, and this chart here is giving me different TAS daily market profiles out there than the chart that comes off of eSignal. So I'm uncertain as to which one to use, but we'll use this one here because that red line going across my screen at 2104.75, we can see that that has acted as some significant resistance out here. So what this tells me is that price wants to move higher out here. When we do see a break of the swing point out here from the trading session of February 25th, that's what's going to set up an A to B equals CD to the upside. I'll give you the conservative A to B equals CD pattern here to the upside. What we're likely to see is the A to B equals CD, the one-to-one price projection, take us into about the 2174 level, and that is for the ES Mini. That is on the daily chart out there. And if we try to go equate that to the S&P index itself, and we take a look at the longer-term chart, again, this is a weekly chart. We looked at this yesterday. What we will find, well, I'm going to have to do it really quick here as we go into break. This equates to the S&P right now moving up into the 2198 level, and that's if it gets above 2120. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 13 points, trading at 18,102. S&P is flat, trading at 2104. Composite up 3 points at 5,013. Russell 2000 off a point at 1263. The DAX up 37. The FTSE up 11. Gold's up a couple of bucks. Silver's flat out here. Light sweet crude up 22 cents. Leading the charge to the upside, Google. I don't know if that's on the news of new CFO coming in from Goldman Sachs or what, but that's trading up about $10. Abiomed, A-B-I-O-M-E-D. I don't know. You pronounce that name. It's up 15% is what I can tell you. Up $9.54 out there. Netflix up about $9. McCormick and Company up $3.47. Tesla up $1.81. Kimberly-Clark just up nearly $1 out there to the downside. Whiting Petroleum. Looks like there's a delay maybe in the opening out here for Whiting Petroleum. Let's take a look at the Sonus Networks down 30. Whoa. Ooh, down 30% out here. Holy shnikes. What the heck is on this? Let's see here. Boy, they've just cut their guidance out here. I expect full year revenue to be up 25%. Wow, that's a heck of a it's a heck of a move out here. How about that? Whiting Petroleum Secondary, I don't know, Bill, what that is. Let me see if there's any kind of news on Whiting Petroleum. Yeah, they are offering. Thank you. They're offering a private offering of $1 billion, worth about $1 billion, 35 million. Shares, it looks like, out here. But let's take a look at this Sonus Networks. I mean, just really getting the kibosh out here. And how about that? That's why you wake up out of bed and you're scratching your head out here. Now, if we take a look at ticker symbol here is SONS. Let's take a look at this. I got to put this on a long-term chart to figure out where this thing is moving to. Let's start off on a weekly basis, see what we can find out here. So on a weekly basis, this equity looks like it's headed back to its swing point area from back here in November of 2012. How about that? Now, the volume that's down there is pretty light compared to where we're already at for the week. So the area that it looks like this equity is headed to is priced out at about $6.80, and it's at $9.27 as we speak right now. $6.80 is the low. Not even saying that that's going to hold, because if price moves down into, it looks like the swing point here, let's see, 680, 705. So the price point here, if it closes inside 790, the volume there was 1.6 million shares. You're already done 5.5 million shares as we speak right now. Man, that it can break through that level, and if it breaks through that level, then you're talking about getting back to the $5 area back in 2009. So that just basically looks about as horrible as you can get as a stock chart out there. Also moving to the downside out here, you got Time Warner Cable. That's off about 97 cents. Nothing really large dollar-wise. Well, China Financial Online looks like they're offline out here. JRJC is the ticker symbol. Looks like they had revenues of 18 million versus 26. That's getting taken to the cleaners out here. That's down 20% this morning. This is still the weekly chart on my screen out here. This stock chart basically doesn't look very healthy, does it? At one point in time, this is back in 2007, was up around the $47 area, now down at $4.91. Where's this thing going? Well, I will tell you that this has come back to the area where it broke out during August in 2014, the week that began August 18, 2014. This thing moved with 109 million shares to the upside. You know, normally you'd like to be able to buy a breakout type of equity like this. I don't know. China Financial Online, probably some better positions for you to take a look at. This thing could easily come back all the way. If it breaks below, we'll call it the breakout level was from the week that began August 11th, $4.28. You're at $4.97. If it breaks below that, then you're looking at a test of about, $2.33 from May in 2014. Ticker symbol there is JRJC out here. Let's see, what else do we see here that is moving? Not really a lot percentage-wise. Those are the two, percentage-wise and or dollar-wise. To the upside, so let's go take a look at the upside out here. Let's go take a look at Google. Let's just look at the GOOG shares out here. Let's go see what it is doing. So as we take a look at this is still a weekly chart. Let's put this up. So the weekly chart looks relatively bullish out here. Let's put the daily chart on my screen and take a look at Google. So right now, Google is headed back up towards its swing point, it looks like. Most recently, was formed on March the 5th. Now, that swing point at 1.3 million shares. You've done 260,000 shares in just 9 minutes of trading. So you're moving up into that area with volume. Prices above the its TAS market profiles. That's a bullish formation profile out here, meaning once it broke above 560.92, which it did this morning, it suggests that price ought to go run up to that swing point high from March 5th. That's at 577.91. Now, you break above 577.91, you do it with more than 1.3 million shares, you're going to have loads of A to B equals CD patterns to the upside inside of Google. The shorter term, the most conservative A to B equals CD pattern inside of Google, that would take us to a price point of Give me a moment here to put that in. And that would give us a price point projection of 593.88 out there. And that is what's going on inside that equity. So moving to the upside so far this morning here with some volume behind that move. Netflix, NFLX is the ticker symbol. We'll go take a look at Abiomed out here. Netflix is up about $8. I don't see Netflix, the premier Chris Tucker's first ever stand. I don't know who Chris Tucker is. I probably should know who Chris Tucker is, but my apology. Maybe he's a musician, and I just don't know who he is. But if we take a look at Netflix, what Netflix here is doing today, it's getting above its market profile resistance level, 429.89. That would be bullish. After the move down here, we've not seen a close above a resistance level, and that's since the high that was formed out here February 26th. So closing above 429.89 would initially indicate a little bit of a change in trend. There's an open window out here. That means a little gap down. That took place on March 16th. That had 328,000 shares, but you got pretty decent volume. So what Netflix needs to do today, from the bullish standpoint, it needs to close that window. It means it needs to close above 436.57. 436.57 is the magic number out there. You close above that, then it says that Netflix can go ahead and try to make a run for its highs out there. And that high, by the way, is about the 486 or so mark. That's what's going on inside of Netflix. Now let's go take a look at this Abiomed. ABMD is the ticker symbol. So this is gapping up this morning. Oh, they've got FDA approval for something. Let's see here. Let's actually pull up the news event. So yeah. Let's see. Determined to be safe and effective for high-risk PCI indication. I'm not sure what PCI is. Percutaneous coronary intervention. Hey, that sounds like a good thing to have a drug for out there. So if we take a look at it, this thing is moving higher as we speak this morning. Got some pretty good volume behind it. 455,000 shares. It must have gotten some similar type news all the way back here on January 28th. Thanks, Mitch and Mr. Bill out there. If we take a look at this equity here, this thing gapped up, big volume, 3.5 million shares, January 28th. You've got another gap. This is certainly not a three-gap play out here. This gap is less than that second gap, so this thing can continue to move higher. Looks like this is at all-time highs. Let me just make sure that we'll go ahead and put the monthly chart on this equity, and you do, yeah, this most certainly is at all-time highs out here. I don't know if that's a substantial drug breakthrough. If it is, there's no reason. No, that could be like just kind of like a change in entity. No reason that it even has to come back to test either of those breakout areas, either of those gaps. That's a ticker symbol ABMD out there. Okay, so we've got the Dow's off 53, S&P's down 5, Composites down 5. Let's go take a look at. We looked at the daily chart out here for the ES Mini. Let's go take a look at a couple of different time frames. So back here to the daily. Now we'll come back and we'll take a look at others. So on the daily chart, I know what I wanted to do out here. I remember, what did I give you that number of 2,000? Is it 2,081.25? I think that's the number here. 2,091 as we speak right now. Price right now right around the TAS point of control area where both buyers and sellers are most comfortable at this 2,091 level. Again, a choppy market here for the next 5-6 trading sessions. Nothing has changed there out there. Choppy again does not mean, in my opinion, does not mean to short. Choppy means to prepare for a buy. If we take a look at a 5-hour chart out here for the ES Mini, we can see here made a nice little price relative strength divergent pattern. It did that yesterday. It had a nice little bearish candle out here. Again, this just suggests and indicates again more confirmation of that choppy-ish style type market that we are looking at. Again, 2,079.50 would also be a nice support level on that 5-hour chart. I don't know if the ES Mini will get down there, but that would be an area to be watching as well. So you got 2,079 as well as a 2,081 level. If I take a look at the 2-hour chart out here, let's go see what we've got. Again, just kind of chopping sideways. For the most part, nothing that I see of significance out here. Let's take a look at, then you've got the Euro-Japanese yen currency pair moving lower as well. So you got to really have things pretty much lined up. Again, I'm just looking at what it's doing right now on its, this is a monthly chart. Let me put the daily chart out here for that currency pair as we take a look at it. Nothing really big here. It's just you've got the markets really moving in harmony as we speak at the for the moment. Let's take a look at. We normally save this for the second hour, but let's just go take a look at the SPY here. I won't do all of the ETF structures, so we'll save that for the second hour. But as we take a look at the SPY out here, what do we know about the SPY? Number one, its a swing point is that we're looking at is February 25th, 73 million shares out there. Now, the low of that number is 211.22, and you got up to 211.27, so you pierced it by 5 pennies on March 18th with 228 million shares out there. 228 was going into 73 million, so you're approaching that swing point with volume. You didn't close inside of that, but when you approach a swing point with volume, chances are that you're going to go test that swing point at least again, and most likely test the top of that, which is 212.24. And if you take out that 212.24, that's going to give you an A to B equals CD price projection up into the 218.78 range out there. So that's what's going on with the SPY. It's trading right now at its point of control. Now, if we take a look at this box, its market profile box out here, it's got a more of a bearish look to it. And what that means is that when you close above, if in fact you close above 211.29, that's where you really see this change in. It's when you break a resistance level, especially one that favors the other side. In this case here, sellers. When you break above that, that says that that area should become a significant area of support. We do not have that as we speak right now, but that's a level that you want to be watching, in my opinion, inside of the SPY, both the 211.29 as well as 212.24 out there, to get a clue as to what it wants to do. So we'll go back and we'll take a look at the other ETF structures during the next hour out there. Let's take a look at gold. Gold right now is back 50 cents. And if we take a look at gold here, what we know about gold is that it broke through its descending price channel. That's a very positive. If we take a look at what gold also did, now this is a price channel that you and I drew in on this chart a long time ago. Weeks ago. So what's so cool about this, and here's where we're utilizing, co-located. That means it doesn't matter whether it's an open or a close from a candle perspective. We're using co-located opens or close. We're trying to identify, at least 3 connectors out here, which is what we've got along the top. Those 3 connectors being the dates of January 23rd, January 28th, and February the 2nd. Those are really our 3 connectors. What we saw gold do here on Friday was we saw gold break above that descending price channel. That suggests we see a change in trend. What we also saw gold do is break above its swing point that was generated on November 7th. Now, it never tested the bottom of that swing point, which was priced out at 1130.40. What it did do is it traded into it. Price then bounced up, broke through the descending price channel out there, and at the same time that it did that, it was also getting back above the high of that November 7th swing point, that high being 1179 out there. That says to me that gold has now got a change in trend that's underway. And the best news was that gold yesterday came back and tested the top of that resistance level, which is now support. That's the ascending price channel out here. Gold is headed for the 1205 area, maybe on an intraday basis. I don't know where we're at on those charts out here. Let me see if we take a look at the current contract. Let me see here off to the side. What time frame is it that we can look at? Let's take a look at a 2-hour chart. So give me a moment here to change the time frame data series. Let's go to a 2-hour chart, 120-minute chart here for Goldilocks. We'll just take a look at the last 75 days. So give me a moment for that to populate. That might explain a bit of the retracement or pullback. Okay, so let's pull this up here. 120 current contract, the April contract here for gold. Now let's come off of the low. So what's interesting here, we saw gold make a low out here, a little price relative strength divergent pattern about 10 in the morning. That was on March the 17th. Let's do some, I'll do this. I'll go ahead and update this chart as we go into this breakout here. Steve Rhodes with TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 23. S&P is down 1.5. Let's go out to Philadelphia to our man, John. John, thanks for calling. Thanks for holding. How you doing this morning?
Steve Rhodes, welcome back from that fabulous holiday. You must be totally refreshed.
Trying to get refreshed. You bet. You bet. Hey, we got just about 2 minutes here, and I know you wanted to look
Steve,
at the S&P.
Let me make it real quick. I just wanted to supplement. You had mentioned you're looking for choppy action in the S&Ps, but only choppy. Let me just share with you, it's worth thinking about as you look into the next 30 to 60 days. Think about seasonally what happens here, and think about last year. Last year, for example, there was a tradable bottom that occurred somewhere around April 7th, 8th, 9th, and then rallied into the summer. Keep in mind that this is tax season. April 1st through the 15th are when tax payments come in mass, and with the rising stock market and real estate markets at the high end the past couple of years, taxes from the upper income class are quite robust, meaning the Treasury gets flush with cash. The Treasury responds by not auctioning off so many T-bills in the ensuing 6 weeks. That's right in their schedule that's already released. That leaves the primary dealers flush with cash. So if we get a chop or a sell-off or something, there's going to be cash that's guaranteed to be there.
Excellent point, and you're exactly right. And folks, the low that John's referring to in 2014, that came in on April the 11th. So you've got that low, and I'm forecasting something a little bit sooner than April 11th, but in that range, really, and that fits right along with the analog of the choppy pattern here for the next week or so. So I appreciate you. Yeah, I appreciate you pointing that out.
Just wanted to share that with you, and thanks so much for all you do.
Hey, you bet. Thanks so much for calling. Sorry that we had to cut this quick. Hey, folks, stay tuned. I believe that Tom's going to do his market update. But if not, I'll be back with you at about 8 after 10. If you're off to start your day, have a great one. Thanks so much for joining us. Look forward to seeing you later or tomorrow. Take care, folks.